Hello everyone, welcome to Search for Yields, fortnightly newsletter from INA Bonds. I'm Nikhil. In today's topic, I'll be discussing with you the bonds which are offering over and above 9% yield in both primary market and secondary market. If you're wondering how to and where to invest in such kind of bonds, the best solution is to get onto the INA Bonds webpage or download the QuickInvest app by INA Bonds, which is available on both App Store and Play Store. Use our platform to get access to the best quotes available in the market and also transact into the bonds in the more transparent way and experience the smooth investment process. If you are a financial advisor, we are offering a partner portal where you can act on behalf of your clients, place bids and offers on behalf of them. And also, you can access our curated list of bonds, which will help you to increase your assets under advisory as well. Coming back to the topic, let's start with the last week updates from the RBI policy meeting. And the RBI policy meeting was it was a mixed note of both hawkish tone and as well as a dovish tone. Certainly, they were continuing with the withdrawal of accommodation. They continue to do so. In the process, they also said that given the sharp rise in vegetable prices, especially the tomatoes, they're expecting the inflation print of the month of July and August to be a little higher than expected. And they want to see they're expecting the inflation to be transitory, and they're also ready to take any action if required in case if the inflation goes over and above 6% tolerance level band. And if they feel and it's going to long lasting kind of a inflation levels, they might come out and say that they might increase another 25 basis kind of a rate hike. So clearly here there is certainly some space in the room where the RBI might look at rising rates given the inflation level goes out of control. On the other hand, they also stated that given the global geopolitical tensions between the Russia and the Ukraine, which are going, and they stopped the wheat export, and India also stopped a few important exports to rest of the world. We could see some kind of global inflation levels going up. Clearly, the US also reported a number slightly higher than the previous month, that is 3.2%. And the oil price also are on the slowly upticking and currently at $86 per barrel. So given this whole rising inflation, inflation in the commodity prices could see some push in the inflation levels globally. And coming back to the understandings from the RBI policy and the implications on the bond market, we would see some yields rising up, and GSEC yields rallied from 7.15% to 7.19%, which means the prices declined for the government bond securities. The 10-year 2033 is currently traded above 7.18%. And the corporate bond market, we'll also see some kind of similar rally in the yields. That means the prices fall. And also given the suction or the suction of the liquidity from the market, the corporates are coming out with the issuances with the higher than the previous issuance levels. Clearly, we have seen in Navi FinServ issue where the previous issue was at close to 10%, and the latest issue which happened 3 weeks back, they issued the bond at 10.15%, which is an 18-month bond. And over and above that, they were offering 10.75% as well. So in this kind of a market, the corporates would if they want to raise money, they have to look at a little higher level of interest. And the MCLR rates also moving up. Clearly, for them, the other best option is coming to the bond market and raise the funds. And we have seen many other issuances coming in the market, especially in July, the public debt issues where when corporates are raising up to 1,500 crores, 2,000 crores. Like Chola, they have done a 1,500 crore issue. They're issuing of 2-year and 3-year and 5-year bonds at 8.2, starting from 8.25% yields. So this in this kind of market, we are seeing the public issuances with the high yielding are seeing a little quicker attraction compared to a low yielding bonds. It becomes easy for the investors to compare with the FD rates, since FD rates are offering the better levels of 7.5 to 8%. AAA paper, which is also giving the same such kind of levels, are finding less attractive to the investors at the moment. However, the investor needs to understand the risk of investing in the bond market, the liquidity risk or the credit risk, and as well as the interest rate risk as well. So let me show you the list of bonds which are offering in the secondary market above 9%. We have a new entry to the list is Annapurna Finance. They have done a recently private placement of about close to 60 crores, and the bond is offering an yield of 13.11% and the coupon of 12.4%. And the interest payment is paid on a monthly basis. Annapurna Finance is a RBI registered NBFC, and the majority of their loan book belongs to the unsecured loans, the tier 1, 2, 3 cities, and uh, to be precise, they give loans to the majority of the loans were distributed in the eastern part of the India, that is Orissa, Kolkata based. And these loans were given to the borrowers at a 23% plus kind of interest, and they have various motive behind the providing these loans. One is social welfare, and as well as the irrigation based, etc. And another one we're also hearing is that Credit Access Grameen would come out with another public debt issue of close to 700 crores with a 2, 3, and 5 year maturity types. More details are awaited, and it is yet to finalize. So we should see another fresh issuance from them. Currently, this paper, what we have in the offers are the November 2024 maturity paper, which is offering around close to 9.13%. It's also monthly payout with a coupon of 9.45%. And the Navi Finserv, as I spoke, they issued a new paper, and that 1.5 year paper is offering a yield of 10.15%. And the vehicle finance company, Hinduja Leyland Finance, is offering a 9.27%, which is a 3 year paper. And Andhra Pradesh State Beverages and UP Power, there are state guaranteed papers. Andhra Pradesh is also did a new fresh private placement of close to 10,000 crores, the bonds maturing from 2024 to 2033. And these are quarterly paid interest payouts. And the current offer which we have is for a 2025, which is offering 975 yield and the coupon of 9.62%. And on the education loan company, there's Avance Finance Services, post sale of HDFC Credila to the venture capital guys. There's a lot of traction in the education loan companies, since there is a valuation derived from the sale of HDFC Credila to the PE guys. So Avance has been offered a lot in the market, and we are seeing offers ranging from 9 to 9.5%. It is a 2 year paper, 7th August 2025, with a coupon of 10.10%. If you wish to invest in the bonds or our curated list of bonds which are available on QuickInvest, you can go there and just click on the invest now, and it's a very simple 3-step process. And if you have any queries, you can always reach out to us. In the description below, we have our coordinates. You can reach out to us for any help or queries you have regarding the bond markets. Thank you for listening in. Do subscribe to our YouTube channel if you're not done so already. Thank you.